12th panel of the event is Leading the Pack, How Firms in New Explosive Areas of Growth Are Differentiating and Staying Ahead of the Curve. And if we can please give a big round of applause to one of our very own, Director of Charter Membership, Jonathan Williams, everybody.
Thank you so much, Andres. And thank you guys for joining us for this much esteemed panel discussing Leading the Pack, How Firms in New Explosive Areas of Growth Are Differentiating and Staying Ahead of the Curve. So I guess we'll start and just hop right on into things. I will have our panelists here give a brief minute background on themselves, and we'll keep things moving. So we'll start on this side.
Thank you very much. My name is Eric Munson. I'm the founder and chief investment officer for Added Ventures. We are a late-stage venture firm based in New York City, owned by a family office, myself and my partners. We bring over 100 years of combined principal investing experience with fundamental thematic approach to portfolio construction.
I'm Jitendra Kavatekar. I am founding general partner of a new fund that we're getting off the ground called Horizon 3 Ventures, H3VC. We invest in the future of how we live and work, which means we really focused on automation as a key technology area. It's AI, robotics, RPA. You cannot hear me? The volume. Hello? Okay, is that better? Horizon 3 Ventures focused on future of how we live and work. Automation, technologies, AI, RPA, robotics, focused on healthcare, enterprise, smart living, just smart cities, smart buildings, autonomous vehicles, and industrials. Previously, I formed and led Accenture's Ventures and Open Innovation program globally.
My name is Michael Blank, partner with the Holden Family Office. We are a fifth-generation Canadian family located in Montreal, Nassau, Cayman, and now in the United States through Miami. We specialize in being at the head of the curve in artificial intelligence, crypto and digital banking, the hemp industry, as well as traditional asset classes.
Dan Krzyzanowski, Rocket Dollar. Show of hands, who likes to pay no taxes? Nice. Who wants more money faster? Nice. We got the right crowd.
This guy.
Yeah.
It always works against.
So yeah, Dan Krzyzanowski, Rocket Dollar. We're a digital platform that empowers you to tap into your retirement to invest in private assets, such as all the great sponsors here. We've been around about 2 years. 9 figures of assets have come through, 500 partners, and an API PayPal-like button.
Greg Kudara, Managing Director at CGI Strategies. It's a single-family office, mostly investing in real estate. Development in New York and Los Angeles, and we do some value add in the Southeast as well.
Perfect. Thank you guys for the introductions there. So first question will be, when you are early in a space, you can't often rely upon 10 years of experience, so besides talking about experience, what do you really rely on? IP, patents, exclusive rights to defend your positions and show the strength of your business program. So what types of things can you rely on outside of just experience? We'll start down here with Eric.
Sure. These new industries that we're seeing explosive growth have different kinds of metrics at some point. So we've done a lot of work with channel checks and things related to downloads. So for example, we invested in Spotify 5 years ago. There was a lot of competitive pressure on the company from Jay-Z's brand Tidal, from Apple Music, perception that they would come in and be a tough competitor. But we were tracking the number of downloads of the application of Spotify on the number of different consumers. We felt very comfortable knowing that the downloads were happening and therefore the revenues would follow. And this is just one example of some of the alternative ways to look at information and data, which is a tremendous tool in making an investment decision. Same thing happened with our investment in Lyft. We bought Lyft again 4 years ago, single digits in the stock price. We were able to see the fact that they were having more and more people download the app vis-a-vis Uber in a competitive situation, getting more market share. The same phenomena is taking place today in one of our other portfolio companies, a company called Klarna, which is a Swedish fintech company. And we see tremendous amounts of people downloading the application here as they launch in the United States and the UK. So we think that there's tremendous ways to look at the data, other kinds of techniques. We do a lot of work with intellectual property and patent portfolios. In fact, there's some credit facilities we've arranged around the patents of a number of firms that we're investing in. So we think that these kinds of companies that are putting up 100, 200, 300% annualized growth rates, the IP and the data that you can track them with is super important in terms of making an investment decision. So we look at all kinds of alternative inputs.
What about you, Jitendra? I know you got great experience dealing with entrepreneurs and early stage companies. So,
Yeah, so I would say from the investment side, what we look for, we're an early stage investor, so what that means is these are tech startups that are still finding their product market fit. They haven't found it yet, just by the nature of the stage that they're in. And with that, what we look for is, of course, the founders. We're looking for characteristics about that founder beyond the experience. You know, are they coachable? Do they know the industries that they're going into? Do they have some sort of ferocious attitude about just going in and every day, just moving the ball forward? But we also look at the market, right? So what does their customer base look like? And we're focused on B2B startups, so it's not as explosive growth initially, but it takes off a little bit later on. And what you're looking for there on the B2B side is really their ability to get some early pilots with customers, preferably paying customers, to start to prove out their technology and try to hone in on the feature set so that product can fit the need for their market. So, but what that all really means for us is that if the market is not interesting for us, if they're, where they're going to market is not interesting for us, meaning we can't help them, we can't give them introductions, we can't find channels that can help them scale when they get to that point, then we don't invest, because that market is going to define a lot of their playground, of course, and there's going to be 20 pivots between now and 3 years from now for that startup, that we're not too hung up on the product, although we want to see strong competencies there. So B2B really drives forward when you hit your channels and get the right partnerships going, and that's where we specialize. That comes a little bit later. We'll talk more about that.
The Holden family follows traditional assets and then the non-traditional side. I basically became involved with the Holden family office because of the non-traditional side. I'm a big believer in following the trends, and in terms of our AI division out of Montreal, the Artificial Intelligence FinTech Group is very unique in the world. It vets 550 global companies a year, and then it breaks it down to approximately 100. And then we have a conference with speed dating and presentations up in Montreal prior to and piggybacking on the International AI Conference in July, at which time companies come in from all over the world: China, India, Africa, US, Latin America, and present themselves. We invite 100 advisors to join us at that time. It is our conference, and during that period of time, it's all pre-IPO. We're looking at these companies to invest in, and then the Holden family commits to approximately 15 of those companies, and then the other 100 advisors can either co-invest with us or invest on a pre-IPO basis. So if that's something that's interesting to you all, it's called Holt Accelerator. You can look it up on the internet, and you can contact Michael Blank and see if that's something that you would like to attend next year.
We tend to look at the first 18 months from ideation to see if there's been a base. Could be the less sexy stuff, such as a SOC 2 Type 2 audit, which is kind of essential in the fintech world, and then just some basic metrics. If it's a niche sort of play, did you still hit 1,000 clients, 9 figures in assets? And then if it's more of a partner channel play, are you at least over 100? So if you check all these, then I think you're ripe for Series A and above. If not, I think you have time to pivot.
For us, it's just a willingness to think differently and take a risk. That's how we got into the extended stay business, and we had an asset that had various troubles for zoning purposes, and we kind of had to find a solution. And we saw that there was, in London, for instance, 80% of all apartments are rented furnished. In LA, it's like 0.001. So we furnished them, and then we had to figure out ourselves how to lease them because it's non-traditional. And we ended up leasing them to companies in the neighborhood in Hollywood, like Netflix. But you had to take the risk, you had to furnish it, and then you had to curate the area. And it's really about being willing to just take a risk and, having to throw away some furniture if it didn't go well.
And Greg, I'll actually stay with you. So what allows you to innovate and stay nimble and ahead of other investors that are competing in the same space as you for investment deals?
So what allows us to innovate?
Yes, and stay nimble.
You know, we just stay very close to our customers, which is we build in the affordable luxury category, right? So we're building 200 units in Koreatown, and we're renting studios for $2,000. So we got to know exactly what that person wants and what they value as an amenity. And they might not value a pool, which is a very expensive amenity, as much as you would think so, but a co-working space. Now, all those guys and girls would love to stay home 2 days a week and not commute in LA. So all of a sudden, having a really nice co-working space, like doing a bit of a thoughtful job, letting a young interior designer kit it out well and make it livable, and that actually adds a lot of value. And you walk in there at noon on a Tuesday, and there's 7 guys and girls on their laptops. And that's when you know you've done a good job on the amenity space, because let's face it, those studios, they're not big.
What about you, Dan?
Yeah, I mean, time is precious and the world has changed. Much like Kevin Harrington said yesterday, went from TV to doing everything on your smartphone or online. It's the same deal, at least in the fintech space, that you have to have people signed up past the paywall in 5 minutes with a very direct, here's a CTA to get the fulfillment done, say, within the next 10 minutes of time. So that's, I think, essential in 2020 and beyond.
We're big believers in the fintech world and the paradigm shift that's taking place today with regard to not only artificial intelligence on the B2B side that I just alluded to, but also in terms of the digital platform and crypto, STOs, and prepaid cards between fiat and cryptocurrency. So we have launched what I believe is the first fully transparent banked crypto digital platform that can be uploaded, and an account can be opened in approximately 7 minutes using the same software as the NSA uses. It's ex-US, unfortunately, but it's got a global reach, and we're looking at large institutional plays right now to be able to upload their client base. So I think that's where we're going in the future. The future's now, and in the next 5 years, I think the entire world of banking, as we have known it in the past, is going to change.
Yeah, for us, I mean, we're also in the AI space, and but we're in a number of different industries. We have folks that are experts in those industries and ecosystem advisors around us. So for us, I think it's really the team, and it's if I just look back, my career at different companies I've worked at, it came down to a team, and whether that team can learn. I mean, I really love a saying a professor at Northwestern had. Strong beliefs loosely held, because it kind of gives you a starting point and you have a vector that you're working off of, but you can change, you can learn, you can adapt. And I think that's really important in the fields that we're in, because we can't predict what's going to happen in 5 years, but we know it's going to change radically. And that's if you can constantly improve every day with your team that's working together, and you get a network effect of learning as a team, then you've got a shot at being at the right place at the right time.
Added has a 8-person team based in New York, 2 people on the West Coast. Again, 100 years plus of principal investment experience. We also have an advisory board globally. We have 570 LPs around the world. A lot of our ideas come from our investor partners as well as our company portfolio members. And we see a tremendous amount of opportunities out there, although we're very selective. In our 6 years of history, we only made 16 investments. We say no a lot because we look to see fundamental value and earnings, positive cash flows. And it's hard to find positive cash flows in the blockchain or AI right now, any kind of pure play. So we're finding some nice little niche companies along the way to sort of establish a beachhead in those areas. But we have a thematic approach looking for these high growth areas like AI, digital healthcare, cybersecurity, things like nature that are long-term secular trends. So you have the wind at your back as you're investing, and the capital flows help your portfolio along the way.
To kind of piggyback on that, can you go into specifics as to what type of deal or funds or investment opportunities you're looking for by speaking here today?
Well, today I was down seeing some clients and seeing some companies in the area, and we're trying to network and learn more about what's happening out there. Just as Jatan said earlier, there's an awful lot of change in the world, and it's helpful to talk to other portfolio managers and allocators. We travel extensively around the world and talk to sovereign wealth funds, talk to other asset allocators, be it family offices, be it institutional asset managers, and we learn a lot from those conversations. And you share ideas, and they help us become better investors by challenging some of our assumptions and making sure that our logic is there and our fundamental beliefs are, in fact, hold merit and hold water when under scrutiny. So that's an important part of the process, and that's what we're here this week doing.
What about you, Jitendra?
Yeah, I mean, we're in the process of putting Fund One together. We have corporates that are engaged and looking at being a partner into the fund. And so from a family office perspective, I wanted to just get a sense of really what's on top of mind for family offices. We do have a family office that is very close to us as well in Canada. It's a US and Canada fund. And so it's an opportunity for me to kind of get to know folks, start building a relationship, and learn what's on people's minds. I think I think it's a beautiful place, of course, and it's hard to resist coming to Miami for a couple of days at the Ritz.
Of course.
But it's been a pleasant experience so far.
What about you, Mike, from the family office perspective?
We have 3 different funds that are primarily populated by family money: Opportunity Fund, Income Fund, and Real Estate Fund. Now we're reaching out for co-investment with other families and friends. One of the investments that could be interesting to you is we have just contracted, and we're hard on the most important mixed-use commercial properties in Boca Raton, Florida. It's 4 of the largest commercial opportunities that we have on a friendly basis contracted for. It's a $150 million deal with $50 million in equity financing, and everything is all done. The returns are outstanding, so if that's something that you're interested in, the Holden family would look for friends and family to invest with us.
Yeah, and from the Rocket Dollar standpoint, anybody here at a Series A seed or doing a sidecar that would take a check from an individual, $250K or below, speak to me. I think we have the secret sauce to help you get more money faster. Personal note, storage baby, is always my favorite asset class, so don't be shy. And then, I don't know who put this up here, but I'm a fintech guy, and I'm looking at Lock Trust, and had a great conversation with Gina LeBlanc last night. I think it's going to be a great global disruptor in the payments industry. So if payments or fintech is, I would have that conversation before leaving today.
On my end, we don't always open our investments to outsiders, but we do syndicate some deals. One deal we're doing in LA is another extended stay. I mentioned the first one. We've got a new one coming in at a lower price point. Half of it belongs to an existing family office, and we're syndicating a tiny bit of that. So if anyone's interested in some LA real estate, I'm happy to have that conversation. But we syndicate only a small portion of our deals. So.
Perfect. Thank you, guys. So when a space is expanding quickly, there are 20, 30 different directions you can potentially go in, and overabundance of opportunity a lot of times. So what has been the concentrating factor of focus that has helped you execute and do well in your investments? Jitendra, I'll start with you because I know you have a lot of experience with early stage and startups.
Yeah. I mean, I take myself back to my Accenture days, not too long ago. So when we formed the Open Innovation Program, which ended up becoming our Ventures program, talking about going in 50 different directions, it's a large company of 500,000 people in 22 industries in every country globally. How do you find growth by working with emerging companies? How do you make that happen? And it took a couple of years for us to kind of prepare and understand what we were doing, because our first instincts would have been, hey, I like that startup, I like this startup, I like that startup, and just kind of go. And you quickly realize it's a pretty big boat to ship, or ship to steer, I should say. And it's a big marketplace, number of marketplaces to go after. So we laid out a framework where it took about a few years, ended up with 40 accelerators around the world. We had about 200 partnerships, 20,000 startups that we ingested into our model. We were in 12 regions around the world. And that yielded about 20 investments. And when we actually got to the investments, and this is for a corporate VC, for the folks that are not used to corporate VCs and looking at them, they move fairly slowly because there's a lot of internal checks and balances to go through and getting consensus to make an investment. Generally, you like to have one sponsor that's able to make the deal, but it still takes time. We did, an investment every month for 2 years. one investment every month for 2 years. And the reason for that is because we already laid the groundwork. And that allowed us to move very, very quickly. So to answer your question, when we look at Horizon 3 Ventures, it's a big space. I mean, just the automation world is big and it's moving fast in different directions. But when we look at these 4 industry areas that we're in, it's a pretty broad brush that we're going after. And so our strategy is to do small bets across 50 companies initially, very small placements, mainly to build a relationship, because we can't tell the winners at this early stage. And we don't have a high conviction rate at the early stage because we're looking at them. But we are getting into those deals because of our relationships in Canada, with Velocity, with Communitech, Jedi, and in the Bay Area with Alchemist and a number of other Plug and Play and a number of other accelerators that we're very close to. We can cherry pick the kind of incoming class that has already gone through some major filters to get there. We pick from there. So those 50, then we watch them. And when they get to their late seed or their pre-A round is when we invest with conviction. Then we put in to get about 10, 15% ownership in those companies. By that time, we've seen them and we watch them, and we've been coaching them to the extent that we can. We're getting data from them. We have a back office team that's able to kind of get metrics on each of our investments. So to answer your question, I think it's you got to lay the foundation, and you got to be able to observe what you're seeing, and then you take the definitive actions as you go. But you don't want to miss good deals either. So there's always exceptions to that rule. So.
Anybody else want to comment on that? Maybe Dan?
Yeah, what I find great is crowdfunding these days to really get involved. Mark Twain had a great quote. There's buy land, there's no more of it. So it's coming to market. So the folks at, for example, Acre Trader, we've done a lot of shared education, and you learned a whole lot about this huge industry and kind of the tech inefficiencies in ag across the board. So it's a very low-cost, low-commitment way to basically talk to all the experts and then determine if you're going to put a big chip down.
The way we played it essentially is to focus on fundamental services in an industry. So, for example, we don't own directly any cannabis companies, but we've made an investment into a data company that does the data tracking in the space, almost like the Levi Strauss model, where they sold the picks and the blue jeans to the miners. You don't bet on the miners. We're not betting on a specific cryptocurrency. We're betting on the specific service providers to that industry with more reliable income streams, very, very clear-cut models of revenue generation, positive cash flows as they establish their businesses. And we go back to those kinds of precepts in our business models. And those are the kinds of things we focus on. Even in emerging industries, you see those kinds of service providers, those kinds of players, and it gives us a comfort level knowing there's a revenue recognition process underway, albeit in an emerging industry. So that's the way in which Addit plays those kinds of trends.
Greg, you have anything to add?
I guess for us, I kind of touched on it before, it's really just listening to our clients, which are not, I'm 41 years old, I'm not a millennial. But you really have to talk to them because what their preferences are just going to blow your mind most of the time. I mean, who here understands Snapchat? There you go. One guy. So it's things like that. It's really just speaking to people and taking them seriously because who knew that 20 years ago that half the people in this room are going to spend a couple days of the week working at home.
Perfect. So in a second here, we're going to open up to questions from the audience here. So just prepare your questions, and we'll get those to you, the mic to you. And so back to our panel. So what is the next phase ahead of us in your deepest area of expertise? Peter Thiel, whether you like him or not, he says that the closest that we can come to predicting the future is to focus on the reality that we know is coming, but most don't see or can't even believe. To be the case. So what is that in essence for you in your area of investment? We'll start with Greg again and just come down the line.
So what's coming next is the question. It's very difficult when you're in the multifamily space and that's at a record, cap rates are at a record low. You've got to find a new way to do things, and that's kind of what pushed us into the extended stay space, which is underserved in LA and in many major cities. I think personally this is not something we do, but I think people are underestimating how strong retail is going to end up being. And the numbers are out there. Amazon's leasing retail space, and everyone's like, retail's dead, and yet every strip mall in America is full. Traditional malls are dead, because that's for many other reasons that I'm not going to bore this whole audience with, but it's so big and it's so out there, and everyone says, still sticks with this retail's dead. So I think that that's underestimated.
Yeah, I'm going to paraphrase Greg. I mean, 20 years ago, to cash a check, it took 3 days. To invest, it took a bunch of paperwork. Now, at Rocket Dollar, we have the Rocket Dollar button. So much like PayPal when you do a retail, if you're doing any sort of private transaction, even a partial share, there'll be a Rocket Dollar button in the background. And then secondly, because it keeps on staring at me with Block Trust here, this is imminent payments. There's going to be no more delay, basically, is my point, I think, within the next 2 to 5 years. And as a U.S., we've been a laggard in that, and that's just not going to be here anymore.
And Lock Trust, if you're here, you might want to come talk to Dan. So go ahead, Mike.
There's a word that we haven't heard in the last 2 days, and it's called hemp, H-E-M-P. And it's going to change everybody's life, just like blockchain, digital banking, and artificial intelligence. We are working on hemp licenses outside of the United States, in Africa and Latin America. The Chinese have been growing hemp for 10,000 years. This is non-psychoactive, non-THC industrial hemp with CBD derivatives. If you Google industrial hemp, you'll find 1,000 uses, from building cars. Henry Ford built a car out of hemp in 1910, and there's a picture of him hitting it with a sledgehammer and it bounces off. It's fire retardant, no pesticides, and you can grow it as a wild weed 4 times a year. So we're looking at, in terms of sustainable, renewable growth, to replace timber in Africa. We have people on the ground. We only go to places where we have trusted friends and partners on the ground, and then we integrate vertically. So if you're interested in hemp and licensing in multiple countries, let us know. We can always partner with you.
Yeah, I would say, on the AI theme, if we look at the enterprise, how companies operate, organizations run, we have an investment we just got into last Friday. I think we're always looking at an exit of this company, so I think the IRR is going to be tremendous on this one. But what it does, and this is indicative of, I think, what we're going to see in the enterprise space more and more of, is be able to predict behavior. It can predict behavior of your employees, can predict behavior of your customers, can predict behavior of the ecosystem around you. One of the key things about your talent is you don't want to lose them, your top talent particularly. If you have a sales team, you really don't want to lose your top sales folks. And this can start to see the signals. It's a deep learning platform. It's been deployed to a number of companies that are using it for this, but can predict or give a warning sign that somebody might be ready to leave. And so what happens then is, of course, you can put in a mitigation strategy or an intervention to address what's happening with that particular person. And on the other end, when you're selling and you have customers, when you want to reduce churn, you want to reduce customers leaving you to go to your competitor or whoever it might be. And so this system can tell you when your customer may be churning out, beyond the NPS scores and other things. So that's interesting, right? But when you start to think about that ability to predict behavior, and you put it across the whole enterprise, not just in your sales organization, but in your marketing organization, your engineering organization, supply chain, manufacturing, customer support, and also your governance of the company, you look across the board, and this platform can start to see behaviors that actually might be related to each other. And so, of course, a common one is looking at customer service and what does that mean to your sales, which is a common, it's common sense. But there might be other signals that you get from these cross-vector insights that can drive things. So that intelligent enterprise, as boring as it sounds, there's some big changes that are going to be happening, and we're already seeing it now. We're seeing the likes of Microsoft and Google's and the others that are bringing these platforms to their large enterprise customers. Our startup is going to be a part of that process, and that's just one example.
Perfect.
Yeah, there's tremendous changes ahead, and we're very excited about the changes we're seeing. You've seen the 4th best decade in investment history in the public markets just concluding here at the end of this year, and everyone's convinced it's not going to be as good going forward. I take the opposite perspective, that things are going to be even better. Some of the trends we've been dealing with for the past multiple decades, the voice-actuated phones and your mobile ability here is going to change dramatically in the 5G world, when you have AI and data tools that allows you to integrate these things, be it in the enterprise or in the personal level. The concept of having a psychosomatic and other kinds of illnesses is going to become prevalent throughout the United States and throughout the world. The better nutrition and figuring out some of those other techniques for health and well-being is also going to be profoundly change our society. So we're super excited about the trends that are ahead. Space, the whole idea of exploring space. We're putting men back into space here in the United States, and we have a significant sector allocation to space and space technology, which we think is going to be $1 trillion a year industry within the next decade or two. So there's an awful lot of things to be excited about and be pumped up about in terms of investing, and we're just thrilled to be involved and be part of the dialogue and introduce clients and ourselves, our own capital, to these really incredibly high growth opportunities ahead.
Thank you guys for that. So we'll open it up to the audience for a question or two. Does anyone have a question for our panelists here?
Hi, I run an angel investment fund that's focused on the marijuana.
Mind waiting for the mic just 1 second. Here it is. Yeah. Thank you.
Hi, we operate a CBD marijuana angel fund focused on the picks and shovels, as you've spoken about. And so as we are, our latest one is equipment leasing, because obviously none of this is being serviced by anyone, even though it's not legal. Any thoughts on, once these, two of our companies will be profitable next year, any thoughts on an appropriate exit strategy as these angel funds go? Is the public market better? Is it better to find, you know, a VC or a family office that might be interested in taking it to the next stage? Thank you.
Yeah, I would say in general, not necessarily just marijuana or CBD or hemp, but in general, we look at angel investors as our feeder school of great companies to look at. We find opportunities where we can add value. We're not looking for peacocks, you know, so companies that are just all flash and, you know, all sizzle and no steak, or all hat and no cowboy, whatever you want to say, call it. But we do love with angels, so work with angels as a VC. So that, I would say yes from our side.
I just invested recently in an equipment lease transaction for a hemp company, and it's a very attractive opportunity, I think, for tax benefits as well as potential capital appreciation. So we've done some work in that space, but I think it's important to do the homework and get to know the people you're working with, and obviously you know your angel investor base. But it's something that we've done some work with, and we continue to have some further discussions on space because there's an awful lot of opportunity. It's an underbanked area, to your point, no question about it.
Perfect. All right, well, that's all the time we have here today, so everybody give a big round of applause for our panelists here. Give them an opportunity to get off the stage as they exit, and back to Andres.